Is Bitcoin going to flood into real estate in a financialized context of mortgages and collateral? Or are real estate investors and real estate investment trusts going to flood into Bitcoin, selling everything and dumping the market? Or is it going to be a combination of the two, a chaotic storm on the horizon with the debt money system of yesterday and the Bitcoin hard deflationary digital energy money of tomorrow? This is going to be the topic of today's video. But first, let's reintroduce myself. Hello there, welcome to the Hashpower Academy. My name is Jake Scanlon. I'm the lead educator here at the Academy, and this is a place for you to learn anything and everything about Bitcoin, but also its underlying network of technologies and commodities. We teach from a fundamentals first perspective, delving into everything to do with energy, then compute Bitcoin mining, which produces all the Bitcoin blocks of the blockchain, which issues and distributes that full supply of 21 million fixed units of Bitcoin. So, the first place to start with this is I'm going to just show you the average house price versus the average salary, and I've used the UK as an example. And as you can clearly see, that year over year, since 1970s particularly, that's an interesting moment in time to understand that our debt money, well, it was disconnected from gold, so to speak. And since that point, the average ratio between the average salary per year versus the average house price went from 4 years to 5 years to 6 years to 7 years. You can get where I'm going with this, to 8 years. Now, what does that mean? It means it takes more time for young people, for example. They have a housing crisis to afford property. And those with the property, they did well. They escaped inflation. The expansion of the money supply very much correlates with house prices. And with a debt money system that has heavily financialized real estate, and mortgages essentially are, well, if you have a 5% deposit on a house, which is the 100%, you're 20x leveraged. The price of the house can drop 5% and then you're in trouble. And that sort of situation happened in a particular moment of time, such as 2008, where the bankers may have ruined a few things and the citizens paid for it. That sounds great. And basically, these are all the issues of the debt money system. But what we also want to understand is what a hard deflationary energy-based currency of tomorrow will contribute to this. For example, the debt money system creates a circumstance where asset prices have to go up, because as mentioned, if the prices drop, then people essentially default on their mortgages, and that is a very serious societal problem. And so the easy solution is to paper over the issues. Now, when it comes to this sort of asset inflation, well, where does it end? Because you've got this tipping point of wealthy people with lots of properties in an investment portfolio context where one house is a necessity. You want to live somewhere. Everyone does want to live somewhere. And on the other side of that, you've got young people and the concern of regulators. Why are all these young people taking risk, high risk with things like Bitcoin? Well, it's because they see the very same assets that their parents and grandparents purchased. Oh, I got my house in my 20s with a couple of pay packets. It's like, yeah, we need to, save for an entire decade? And by the time we've saved for a decade, the cost of the house is now 15 years for a deposit. Yeah, that's the problem. And so what we need to do is wipe the slate clean and understand some of the tipping points with a form of hard deflationary energy money that is entering, just about every part of the financial world and every part of the energy sector. Bitcoin is on and off every electrical grid across the planet, expanding energy and compute in a fixed supply of 21 million units. So continual increase in purchasing power. And so if we give this a real estate context, let's say right now that it's about 4 Bitcoin for one property. Where do you think the tipping point will be? Where do you think that mindset of, okay, I've got all these properties and on a Bitcoin unit of account, they are continually declining. The value of a house in a quantity of Bitcoin continually decreases. For example, there are people that they had hundreds or thousands of Bitcoin early on and still made, in dollar terms, millions of dollars for it. And so they sold some. They sold 100 or 1,000 Bitcoin to buy a house. And years later, they may have sold it. But they didn't get 100 or 1,000 Bitcoin back. They got like 4. And it makes you think, oh, well, I should have just kept all my thousands of Bitcoin. But I think over time, we're going to have this continual rollover of people in society investing on spending their Bitcoin on their necessities versus their wants. Why own a portfolio of 5 homes when you live in one and 4 others are essentially land banking? And that's what the fiat money system has created in society, is people trying to escape inflation by holding assets that other people may want to use as a necessity versus an investment. And if you own a bunch of multifamily homes, there's an ethical concern there that there's other people that want that ownership psychology of owning their own place. And if there's an artificial scarcity of properties all being owned by a select few, that can create societal problems. I'm not saying it's necessarily bad, because if you have the capital to buy it, it's yours. That's our ownership structure in society. And they say possession is 9/10 of the law. So I believe that the key tipping point is when the average house price is under 1 Bitcoin. I just think there's people that have a quantity psychology that say, oh, Bitcoin's too expensive, I can't buy a whole one. But you can buy fractional. It goes down to 8 decimals of the quantity that you can purchase. But I believe that tipping point, that when 1 Bitcoin is the average house price is less than 1 Bitcoin, I think that's going to open the eyes of a lot of investors. And does that create some form of selling event? Not today, not tomorrow, but progressively over time, where house prices continually drop because there is this flood of other markets and other investments being sold to go into Bitcoin. And so if we give this the examples of today, right now, I think in pounds, it's about 200 to 300,000 per house, average house price. And in dollars, that's like 400 to 500K. 500K. So yeah, if Bitcoin reaches these sorts of levels in dollar terms, and we see that tipping point of the average house price at a particular moment in time crossing below the average statistics published by the government, shall we say, that the average house price is now less than 1 whole Bitcoin. That has to make someone's eyes open, and it would be a serious tipping event. But the other side of that is, if there's other people with mortgages that are leveraged, you know, if you're whatever your debt is versus the value of the house, if the value of the houses continually drop to their utility value, which is essentially what's probably going to happen if there's this flood towards Bitcoin, is the debt money system collapses prices back down to their utility value. And the utility value of a house is not the current price of the houses at the moment. And so that's a concern. So how do we address that concern while still having a debt money system? Well, this is where it gets interesting, because right now there's all different people trying to financialize Bitcoin in the context of real estate. So not just this flood of money coming from real estate and selling houses into Bitcoin, but how Bitcoin could be part of people's mortgages, so that your collateral position is essentially whatever your debt is, let's just do a negative there. You've got maybe this potential, I don't know what the debt will be, let's just say 80%. You've paid off some of it. And the value of your house starts at, let's just do a little picture. The value of your house starts at the 100% in reference to the 80% you paid off. But what if house prices drop 20%? You're in serious problems. Yes, you're continually paying this off with interest, but what if a small chunk of Bitcoin was added? That's the interesting thing, because we're comparing this tipping event where the price of Bitcoin in dollar terms, because we have to do a dollar-based unit of account with this. If the dollar price of Bitcoin is shooting up because there is this flood of money coming out of real estate into Bitcoin and demonetizing these sorts of assets. One of the healthiest things for individuals to protect themselves from the risk of the collapse of the debt money system in the context of investors flooding out of an asset class, if you are in that asset class with some form of debt associated to those assets, then Bitcoin might just be that hedge essentially against the decline of house prices. So if house prices dropped, I'm just going to draw it all out now. If house prices dropped, but the Bitcoin in your collateral increased, it's essentially a hedge against the deflationary environment that you're in, that you've got this hard asset, and that just might help. Real estate isn't exactly my specialty, but I'd love people to dive into the comments with these sorts of perspectives. But yeah, having collateral that is a portfolio essentially of different things, that just might make the difference. But what's the pristine collateral? It's Bitcoin. It has its volatility in dollar terms as well. So any form of debt that you would have, you'd be measuring the dollar value of the Bitcoin, which is volatile in space, but preserves value over time. But I think mortgages with Bitcoin are probably one of the best things that could be done, and potentially it lowers interest rates as well, as it represents itself in a lower. You're adding collateral versus your debt, so you should effectively have lower risk premiums, but we will see. I think I'm going to stop it there, but yeah, I'm very interested to see multiple different assets drop below one whole Bitcoin. Assets of all different size and scale. There's also the one of the market cap of when it outpaces gold and all the other top 10 assets in ranking. Yeah, thank you for listening. Hope you enjoy. Go into the comments. If there's anything I've missed or not said correctly, please correct me, because we're all trying to learn here. So yeah, thank you for listening. Hope you enjoy. Goodbye.